What is up, everybody? It is the Friday night wrap up. Thank you for joining me. 8:30 East Coast, 5:30 West Coast. I'm going to change it up a little. Usually I tell you guys why I'm here, and I'm here for two reasons always. The first one hasn't changed. I'm here to simplify. I simplify everything I see in the market, and I provide it to you. The second reason, level the playing field, meaning I teach you guys how institutions trade, how they think, what to look for, everything like that. But I did even better right now. I'm going to simplify it even better than that. One simple reason I'm talking exactly to you, all right? It's to make you a better trader. And I don't know who you are. It doesn't matter if you've been trading a week, a year, a couple of months. It doesn't matter if you have $100 or $10,000 or $100,000. I'm here to make you a better trader, to teach you something about yourself, to help you see things differently, and to make you better at what you're doing. We're going to go over lessons today. I'm going to help educate you a little better than you are. It doesn't matter what level you're at. I'm trying to step you up one more level, and from there, we'll step you up another level. You're going to be more profitable. That is the goal, to make you better traders, to make you more profitable. Now, a few quick points. First, I saw Jim Cramer blow up the other day, right? I finally saw the video. You guys were talking about it. He's talking about Twitter and how people are insulting him, and it's great. It's great. He deserves it. He worked for the hedge funds. He's not transparent like Kathy Wood. I live by transparency. So that was absolutely great that he blew up. And let me just remind you, what I'm doing here is I'm trying to build a community. Those of you watching me, you're here every night. Those of you who are new, you're going to hear a lot about me. You're going to see results. You're going to hear how we trade, how I trade, because I trade through transparency. But the goal is to build a huge community, not 2,000, not 10,000, like 200, 300,000. All right, to teach you all to be better traders. And if we trade in unison and we beat the institutions, that's just an added bonus. But again, the simplistic goal is to make you a better trader. That's why you're here. That's why you're here to learn. All right, real quick also, I get DMs on the side. Everything I do for this platform is organically grown. We don't do marketing. We don't do anything else yet. So when you guys reach out on the sides, and I literally get probably 77 to like 87 texts a day, DMs on the side of my Twitter account. Both Twitter accounts are public, so we're trying to, narrow that down. But again, when you're sharing your profits, please share them public Twitter. Share them with everybody. And the reason I say that is we're growing organically, so I really need your help to show people the results, to show people rules work. When this video is done, please share it with your friends. Anybody that's interested in trading, please share it with them. YouTube is free. My Twitter is free. I do have a platform. I'll talk about that later probably. Okay, my platform's $3.49 a week. So I'm here to basically educate you. But please, any DMs on the side, good things. You're following the rules. You're making money. I love to see it, and that's what I tell you. But please, share it with the public. All right? We're going to go over real quick today, market recap, but we're going to do it a little differently. We're going to recap the year real quick, all right? January and February, all-time highs in the market. It was just so bullish. Then what happened? Early March, we had 2 weeks of just bloodiness, selling off. Everything was overvalued. Some stocks were down 12%. Some stocks were down over 50%. So that was one correction. Now everybody's waiting for the second correction. Stocks are still pretty frothy, okay? So anybody that pays attention to my alerts, the reason we only did 2 stock alerts this week and one was repetitive, we were just adding to a position, was because the market's pretty scary. It's very volatile. There's not much demand. So you don't want to get in too high, especially if they're going to force the market down. Now, this is what the institutions are doing, and I'm going to get a little more specific in a minute, but they're completely manipulating the market. And they could do so on days like today and the past 3 days before that when there was such light volume. Monday was a good volume day, but Tuesday, Wednesday, Thursday, Friday, no volume, easily manipulated, easily following the market's path. So when the institutions decide to sell off in the morning and tank the market, and we saw it today just real quick at 10:45 to 11:05. I tell you, that's the perfect time to study. You see what the market did. So my video to my platform members was, it doesn't take a genius or a rocket scientist to see that the market basically tanked. So you were prepared for the next cliff that it fell off. So it looks like it's going to recover, looks like it's going to recover, looks like it's going to recover. Your stocks aren't recovering. The market was still finished down. I don't remember how many points, but I think the Dow finished down like 200 points. If I'm wrong on that, I'll check it out later when I go over stocks. However, on the contrary, we had some stocks that did very well today, like Delta, which I expected to move yesterday. Carnival moved really late. I mean, talk about manipulation. Again, I'm going to get into Carnival. I'm going to explain what we saw. but it finished at 28. It finished at like a fair value. It should have been a little higher. It's probably going to be 28.55 on Monday because I'm always a day late, and the institutions do that for a reason. And I still, I put myself in more risky options positions. But everybody that's good and that bought the dip and has the May 7th calls and even longer, some of you went out leap years, you're going to crush that position. Carnival is going to be a great stock. All right. It's on my picks as well. I own shares of stocks. So when I talk about my picks, it's stocks that I own. So again, what do I see for Carnival? I see like 45 by the end of June. It's about 2.5 months. That's insinuating probably like a 50% gain. All right. So, snapshot this moment. If you're not following me, if you are following me, look at Carnival. Okay. I don't like the other cruise ships. I happen to like Carnival. All right. So back to the market, what we saw today. Lately, these companies, these tech companies, what was it? Apple, Twitter. There are tons of companies. Netflix. They came out with earnings. They got rocked, even though some earnings beat and some earnings really exceeded. The stocks didn't react that way, which is telling you they're already overvalued and that the growth was already factored into them. We're still at all-time highs. Keep that in mind. Tech is pretty close to an all-time high. The Dow's close to an all-time high. So what could change the catalyst? What could bring more volume to the market? Well, there has to be a catalyst. So a sale would bring a catalyst. Now, if there's a sale, we're going to know about it first. If the market's going to sell off 15% on light volume, we're going to see it on repetitive days. Now, we almost saw that, but I saw the institutions jump in at certain points today, buy up stock. So right now, they're just rolling with that. Anytime they can scare you and make you sell. And I have some followers who had some options positions this morning. One told me they sold, and then they calmed down and they made their money back. I've heard so many stories today about how they almost sold really cheap. That's what the institutions want you to do. So if that's the only thing you get from this whole video, it's that the institutions are playing mind games with you. And if it's not the institutions, it's the rest of the markets. That's what controls the markets. It's the hedge funds, the institutions, and you know who we're trading against, right? We're trading against computers. That's why I do so well. All right. I see volume. I see spikes in demand. These algorithms are taught to buy a certain way. And that's a pattern I recognize. When I used to play blackjack, I used to recognize the pattern of the card counter, the cards that would shuffle it. So I'd always go to an automatic shuffler because the patterns ran somewhat similar. So when I just memorized the cards, basically. All right. So that's kind of where the market's at. All right. Very good. January, February, too frothy. March, we had a pullback. Right now, there's such light trading volume. So there's so much money on the side. So what's going to get a catalyst? Maybe a Biden deal. Maybe something that's great about like COVID, like India's, vaccination, the people getting COVID, maybe decreases. They had 360,000 new cases today. That's insane. Insane. All right. So I do want to speed this along because I want to make this more educational and more lessons today. So what do we do? Let's say the market capitulates, falls down, is going off a cliff, something to that extent. I'm going to teach you guys 4 or 5 different ETFs, exchange traded funds that you can invest in. I'm going to go slow because these funds are somewhat complex and they move fast. So if you think the market's going one way and you get on the wrong side, you could lose a lot of money. Now, you can buy shares in these exchange traded funds, but you also can buy options. Now, the same rules apply. The 25% rule, the finding the best entry. All right, so please, I'm going to have these notebook moments, I'm going to call them. Please grab a notebook if you have, grab a tablet, whatever you want to use. I'm going to give you 1 second, and I'm going to talk about these ETFs that control the market. So when you know the market direction, even though your stock isn't reacting the way that you think the market should, you can still make money. So if the market's crazy volatile, the UXYV will spike, and then we'll buy puts and expect the market to just calm down and stabilize. And the UVXY, which is the volatility index, I'm going to explain everything. So again, grab a notebook. I'm going to have 1 sip and where to go. Okay, we're going to talk about tech first, all right? The NASDAQ or tech. A lot of people think it's overvalued. There are a lot of stocks that are at all-time highs. Tech is at an all-time high. Earnings aren't doing it. Like I said, Twitter came out with earnings. They had good earnings, but they said expect less people to subscribe to their platform than they originally anticipated. So the market's looking for any reason to sell off. So it wouldn't surprise me if there are certain tech stocks that just get beat down. So how do we play that? Well, every day, there's a dip and there's a spike in the market. All right. So we're going to talk about tech first. The first symbol we're going to talk about is TQQQ. All right. Write it down. TQQQ. All right. You know what the QQQ is? It's basically if tech goes up, the QQQ goes up. So the TQQQ is like tech on steroids. It's the QQQ times 3. So if the NASDAQ is up, let's say 1%, the TQQQ will be up 3%. All right. That's just simple math. I'm just explaining how it moves. So if you get involved with this ETF, you know that you're rooting for the NASDAQ to be bullish. All right. TQQQ. If the QQQ goes up 1%, TQQQ 3%. So what does that mean? It means if tech gets rocked one day and it's down 200 points and you see the market's going to recover, you can buy the TQQQ. You could buy call options if you like. All right. The same is true. Okay. If tech is pretty frothy one day and it opens up like plus 300 points, like the market's been doing lately. Monday, we saw tech and the Dow open up strong, and we all knew they were going to sell off. We all spoke about it. You know, there's going to be a morning sell-off. Yeah, right. What I'm going to do is I'm going to sell at market open, then I'm going to buy back on the dip. That was the strategy that was going around the platform. So if you have a strategy and you know what to expect in the market, so you're looking for the dip. So the NASDAQ dips to wherever it is, and you think it's only going to go up from there. So the NASDAQ's off 220, and you're like, it'll probably finish off 60 points. That's what Matt says. Matt says, well, recover afternoon at 3 o'clock will be strong. So you could buy shares in the TQQQ, or you'd buy call options. All right. Now, the inverse of that, or the reverse of that, okay? Say tech is pretty high. All right. The SQQQ, write it down, please, because you don't want to confuse these. If you confuse them, you're taking the complete opposite position. So the SQQQ increases when tech goes down. TQQQ is a positive thing. SQQQ, when the market's going down, that goes up. All right. So again, if you think the market's going down, tech related, the SQQQ will go higher if you're correct. So again, you have shares and you have options. Okay. And you can play each of them. So the SQQQ, you say the market's going higher, right? So the SQQQ will go down. So you could buy put options. I like doing that because the SQQQ is in the teens and the TQQQ is like $108, $110, which makes the options more expensive, which makes the shares more expensive. So I'm looking to get the most leverage out. So I look for the least expensive. And I know millennials like that as well. They look for the cheapest airlines. They look for the cheapest pod company. They look for this, but they still want the most movement. All right. So now we've covered it. The TQQQ is bullish for tech. So you'd buy something like that. If tech was, off 240 points, you thought it would finish off like 60 points or even flat. Now the SQQQ, say tech is up 300 points one day and you're like, the market is going to sell off. I just know it. So you could buy a call in the SQQQ. All right. So those are those two. The Dow has something similar. So I'm going to explain the Dow real quick. The Dow is the UDOW. That's a positive bullish ETF for the Dow. The UDOW. And then you have the inverse, which is the SDOW. So if you think the Dow is going up, it's flat right now, and we think it's going back up 280 points today. All right. We could buy the UDOW shares or options. Now, the same things apply. We're looking for the best price. So if you think it's going up, prepare in advance. You know, the spreads are a lot more narrow. It's only 1 penny, 2 pennies, 3 pennies. So it's not like it's costing you a nickel or a dime times 100 per contract. You're not losing, $50 or $100 here or there. You're losing, $5, $10, whatever it is, depending on the number of contracts. Okay, lastly, now you guys hear about the VIX, right? The volatility index. That's what the VIX is. VIX, volatility index. If there's craziness in the market, like I speak about lately, that how the market's so volatile, it's having these crazy down spikes, these crazy up spikes. So the VIX, people play as like a safeguard against their stocks, against the market crashing, things of that, extent. So what is the UVXY? Well, I'm going to tell you real quick. It's the VIX on steroids. You take whatever the VIX is doing and you multiply it by 1.5 times. All right. So that's how you deal with instability in the market. If you want to safeguard some of your positions and you think the market is going to be crazy, you could buy calls in the UVXY. And let me tell you just one thing about the UVXY. If you want to look at the chart of it, you'll see that it started, a month ago at 10. It spiked to 15 during those Capitol riot things. I bought put options. Now where it is, it's about $4.50. All right. So all it really does is go down as the markets are reaching new frothy highs. The NASDAQ and the Dow, people's volatility goes down. So even if you think the market's acting crazy, you can use that as a tracker, basically. You guys have paid attention to my tracker lessons. So I have the UVXY as a tracker because it shows me the stability of the market. It's like almost like an earthquake detector. If it starts going wild, it means the market could fall off a cliff. And that happened today. It spiked from 448 or something like that. It went all the way to 466, which is a major move. Okay, 448 to 466, that's like 18 cents. But what that is, it's 5%, or a little under 5%, 4.75%. But that's a major move for the volatility index. So that told me in advance, shoot, the market's going down. Now, what was amazing is there were a couple stocks that were resilient. Okay, they got beaten down yesterday. Carnival, Delta got beaten down yesterday. Today they were resilient. All right, so please, I hope you guys understood that. If you missed part of this, just go backtrack. I just spoke about in a rough, volatile market, there are market trackers that you can play rather than stocks. So just to recap real quick, the TQQQ, okay, goes up when tech's going up. So if tech keeps reaching a new high, the TQQQ will be higher. The inverse, if you think tech is frothy and you think there's going to be a market sell-off, but you don't know what stocks to short. So say you just want to short tech as an entire market, you would buy SQQQ or SQQQ options. Okay, the same is true with the UDOW. If you think the Dow is going up, like let's say there's good vaccine news and India is getting better and movie theaters are open and New York's going to open in July and things like that, you can go with the UDOW, which means you don't have to play individual stocks. Say you don't want to play like Dave and Buster's or movie theaters or airlines, but you want them all grouped together. Then you play the UDOW. Now, if you thought like everybody was getting sick again, and it was spreading and there are different viruses spreading and things of that nature, and they're closing shops in your town, then you think the Dow's going down. Then it's more tech-friendly market. So if the Dow's going down, you look at the SDOW. And again, my key indicator, I like to use the volatility index, which is the UVXY. Okay, so hopefully that's a quick lesson. It's just so we don't always have to talk about stocks. We can talk about market direction. So those of you who follow me, I've been calling the market on fire lately. All right, some of our stocks don't respond. But like yesterday, I said the market, when the Dow was only up like back to 50 points, I said it would probably end up like the futures pre-market. And what did the Dow do yesterday on Thursday? It went up 280 points. Yet my Dow stocks were struggling. So the play would have been the UDOW. When the Dow was at the lowest, and I said it was going to recoup 200 points or 230 points if I played UDOW options or SDOW puts. They're both the same, okay? Puts on something negative, calls on something positive. It's the same. It's like a double negative. All right, with that said, I'm going to get to some slides today. I know it's Friday night. I appreciate you guys spending some time with me. We're going to do some slides. I'm just going to share some lessons and what we're seeing, some things that really stuck out to me during the day, and how we can make money in such a volatile market. So I'm going to help you guys kind of experience sharing through I'm going to show exactly what we're talking. Oh, sorry. I had a little more. Yeah, but we're going to get to it. All right, let's just see some slides. How about that? Let's get talking about some slides. I'm going to get a quick drink of water. I appreciate everybody spending their Friday nights with me. Hopefully you guys are going out after. Let's get a slide up, Carlos. All right, why don't I do it, Carlos? Sounds good to me, right? All right, there we go. How do I make it larger? Maybe that'll work. Let's see. Hey, there we go. All right, Friday alert. This morning, I'm just sharing with you, this is how I do alerts. So I give them pre-market. Now, let me show you what I'm seeing in the bar chart. You see all those green bars? That is showing you more inflow. That is showing you demand. Anytime you see that for any stock you're looking at it, more green, more inflow, 4 days, 5 days, 6 days. I used to be in a stock called Candy, KNDI. I saw 7 straight days of green. And I would point it out. There's 4, there's 5. And every day it was going up. When I stopped seeing that, I sold. The same with CSIQ. I would see it every day. When I stopped seeing that, I sold. All right, let's go to the next slide, Carlos, if we can. Also, I notice volume. So if you're new with me, if you're not new with me, here's what I see in the market, okay? I'm very good at volume, demand, and patterns. And I see them first. So I generally see the first spikes. I don't use computers or algorithms or anything like that to alert me. I use my eyes. I understand how these computers and these algorithms function. That's how my mind works. I love math. All right, so that's what I show you. So anyway, Blink had some pre-market activity. That's what I showed you. Let me go to the next slide. real quick, Carlos. All right. So right there, it was $37.50. I rarely buy pre-market, but I sent out a tweet. It wasn't an alert. It was more of a tweet because it was my personal account. If it's an alert, it means that I think everybody could buy it because I'm 100% convicted and I think we're all going to make money. But this one was a scalp for me, and I said I'm going to be scalping today. There it is. So $37.50. Let's go to the next slide. What I ended up making on that was I made 3%. It's not a killing, and to me, it was only a couple $100. I think I made $240, 3%. So it wasn't that great, but it's a grind. So no matter, again, what size count you have, it's a grind every day. We try and make 20 here or 200 or 2,000. And then we do it again and repeat. So here's an alert option. I remind you guys with the options, any option you're in, you have to set your own price for profit. Is it 20% you want to make? 40%, 100%, 200%? We've made all that, and we've all made it on the same option play. It depends when you want to exit. But I'm not here to tell you, you're supposed to exit. I tell you what I'm thinking in the market. I tell you what I'm doing. So I was looking for the best price I can get out of Delta this morning. I got it. It broke, what was it, like 4704 or 4804? One of those, 4704, I think the number was, right? So I said, okay, I got $1 per option, $100 per option. I only spent $73 on one of them and $82 on the other. I had 10 and 10. All right, let's go to the next slide because I know a lot of people got my alert. All right, so the market was suffering this morning. The market was red, 200 points, yet my group was making money. So I love that. I did a video to tell you guys what I'm seeing. Let's go to the next one real quick. I think we're going to go like this. Okay, so here's my alert spreadsheet. What do you guys see? If you're new, you're new to seeing this, you're seeing a lot of green. If you're old, you know what my spreadsheet looks like. Yellow positions are new positions. Green positions are closed out positions. White positions are open positions. All right, the top part is stocks. Stocks, I'm 11 wins, 1 loss for stocks. For options, I closed out 3 positions today that were all green. All Delta Airlines, all green, all made money from my alerts. So that takes my alerts up to 28 profitable trades, 10 losing trades, and I believe I have 2 open trades. So again, 28 wins in options, which is amazing, right? I'm at 74%. Anybody that knows that they bet sports or something like that, if you bet sports, if you win at 55%, you're a winner. At 57%, you're on fire. At 60%, something's probably rigged. Well, I'm trading options at 74%. I give you the alerts for those. Okay, anything I'm sure about, those are my alerts. I tell you when we're going to enter, how we're going to enter. Plan ahead. That's a lesson. I think I'm going to talk about that. Let's go to the next slide. Basically, I like winning trading. If you like being a winner, okay, I don't mean to sound like these other gurus, but I'm a 90% trader. If you like being a winner and having smart trades and showing it off, making money instead of watching the computer or watching your phone or losing money, follow my platform. Okay, so somebody else with Delta Airlines said they were down this morning to 486, bought a few more options because we speak about averaging down the right way. They sold it for $1.26 and sold their shares, and they made $476. Let's go to the next slide, please, Carlos. All right, here's another person. So just to give you guys percentage gain, because again, I tell you, it doesn't matter if you have $10 in your account or $100 in your account, 1,000, 10,000, it's percentage gain. So this gentleman right here was showing us today's return, 70%. Yeah, so it wasn't necessarily an alert from today. He made 70% today. So it's great. All right, next one, please. All right, thank you. He made 81% of his Dallas options. All right, next one, please. Delta options. I keep calling it Dallas. All right, Mara. It doesn't have to be a play I'm talking about. If I'm speaking of Bitcoin, which I'm going to show you some slides real quick, you can make the plays on Mara, on Riot, on any Bitcoin best in class. So let's go to the next, because I think I have some Bitcoin slides coming up, which is I'm real excited about. All right, again, Tiger, TIGR, one of my favorite stocks. If somebody asked me about this earlier, Tiger is still around $21, $22. It's very resilient, okay? It's like the TD of China. They want to let you trade American stocks if you're in China. So it's perfect. There's huge demand for that. Everybody knows the more trades that occur, the more fees, the transaction fees, these companies are going to be all great. Same with Futu, FUTU. I love that. I love Tiger. Those are my all-time industry favorites going forward right now. If that changes, I'll let you know. Let's go to the next slide, please. Tesla. So I mentioned Tesla in yesterday's one, and I'm sorry to talk about these things, but these are great results that I just want to talk about. So yesterday I mentioned that I bought these Tesla options, and they tanked right after I bought them, down 60%. I bought one more, and then I bought 2 more, and then I sold yesterday right before the market closed, and I made $600 on a $3,000 investment. It's 20%. I was so happy. Now, what happens? Bitcoin spikes this morning. Tesla has $1.5 billion of Bitcoin. So you're going to see this gentleman's return. He had solid hands. He held overnight. He liked the way the chart was ending yesterday. I was just happy to get out. I had such a bad entry point. So I talked to you guys about entry point. If my entry point was $4 lower, I would have held on for the ride. I would have made about 500%. But I got in too soon. I paid 13 for my first, 10 for my 7 for my second, and then I bought 2 at 5. If my first buy was like $5 or $6 per contract, or $500, and I bought like 6 of them, I would have been in here for the whole ride. I would have made $18,000. So that's how you take small accounts. $300 would make you $1,800. It's all about timing and entry. Let's go to the next slide. Let's finish up with slides. I want to get to questions soon. All right, Bitcoin. Anybody that was with me last weekend, public Twitter or my platform, I mentioned, wouldn't it be amazing, because I see the Bitcoin chart and every one of these highlights I do, I expect it to spike. So I said, this could be it. Bitcoin could spike maybe 20% from 50,000 to 60,000. Let's go to the next slide, please. Okay, now I have a theory. This is really good about a lesson too. Every time something happens, have a theory behind what happened. So I tweeted out, you know what I thought happened? I thought Kathy Wood pushed Bitcoin up. Maybe her rich friends, all these people have so much money. Why would they do that? Because Tesla has so much Bitcoin. Tesla was getting beat down for 2 days, and she probably had Tesla options. We know she's got a boatload of Tesla stock. So that's my conspiracy theory. Okay, let's go on to the next one. It doesn't really matter. Bitcoin went up and followed the charts. Okay, somebody reached out with a question today. My CCL options weren't doing well, but everybody else's were. What's going on? CCL was up. My options are going down in price. And I explained to him, he bought the wrong option. He bought $28.50. I had $28 options. And you saw the manipulation that happened with Carnival today. All right, same thing that happened yesterday. It was up off good news. They sold off the news. They pressured it down. They pressured it down most of today. It started to have a run, but the market was so beat up. The market was off 220 points at the time. Imagine if the Dow finished flat. What would happen to Carnival? $28 would have been a joke. It would have been $29. And those option contracts that we were paying, 12 cents. I paid 4 cents this morning. I took a shot. I spent $400. All right. I bought a boatload of contracts for 4 cents. They became worthless end of day. It happens. You take a shot. You got to know your risk versus reward. Now, say the Dow recovered and Carnival spiked. Those $4 options would have been worth, in my mind, $54, $50, something like that. A huge return, 1,100%. So it was a risk of $4 or $400 and a return I was looking about $4,000 if I was right. So if the market turned around and recovered strong, it did. It started to, and then they sold it off a little at the end of the day. So again, have a reasoning behind what you're doing. All right, let's go forward. Always have a strategy. All right. This I might be too small to read, but basically, if you're new to following me, these are almost testimonials. Please follow me on Twitter. There are testimonials all the time, and everything we're doing is organic. So if you don't believe I am who I say, or I'm on fire like this, that spreadsheet I started in March 1st when I started everything. So if you don't believe it, please sign up for my platform. It's $3.49. Look at this spreadsheet. You can analyze it all you want. It's open for business. I am who I say. I'm transparent as hell. The only reason I like Kathy Wood so much is because she's transparent. She shows all her trades. The reason I hate Jim Cramer so much is because he's a hypocrite. He talked about XL one time. It was at $19. He loves it. At $8.75, 6 weeks later, he hates the stock. And he does it all the time. Then he's on Bitcoin. Then he's on GameStop. Oh, I told them how to make money. Why do they hate me so much? They should have done an offering. He's a jerk. He's totally not connected with today's society. All right? Who runs society? Retail traders do. So back to what my formula is, or what I'm thinking in my mind, I made my platform so cheap, so inexpensive, because I want to educate. I want to educate as many of you as possible. If there are 200,000 of you, or 300 or 500,000 of you, I want to change the market. They laugh at retail traders, the hedge funds, the institutions. Why? Because history repeats itself. They do the same thing every day. So that really upsets me. That's why I left Wall Street in the first place. It was immoral as can be. So they just found ways to change the game. But it's still about taking your money, taking my money, making you look silly. Oh, the comment that I took off the screen, by the way, the testimonial, was basically people saying that they were up money last year in 2020 when everything was up. And then they lost that money back and then some more, about 50% of what they started with. So they lost all their profit plus 50% more. And then they found me on Webull or Instagram or whatever it was, Facebook or Twitter. Some people were just telling, everything's organic. The point is, they're not even yet. Can't help that. But they're making progress and they understand how to trade so much better. And that's what the goal is, to make you a better trader. So that's what I understood today. I was like, the goal isn't to simplify. It's not to show you everything I'm seeing, because certain people will see different things and take different things from my videos. Some people will love the lessons. Some people will love the education about the ETFs today. Some people will love the Q&A at the end. So everybody take their own thing. I'm not forcing myself on anybody. If you sign up for my platform, or if you don't, it's $3.49. You can cancel right after you sign up. But on my platform, I have rules, I have lessons, I have the psychology of trading. Everything's a thought process. If you think trades just happen, you're wrong. Trading happens because they're thinking about you. Institutions aren't going to buy until it's the bottom and they see true value in a stock. So when some of you follow a stock, and you're going to see it in the Q&A tonight, you're going to give me certain stocks, and the charts are going to look like poop, basically. I mean, I don't know how else to say it. They're going to look like shit. And you're going to say, yeah, but I looked at the chart and it looks like it can rebound. There are some stocks that are going to rebound. But remember, the market's at like an all-time high almost. I mean, we're just off the top. And people are talking about a sell-off of 10 or 15%. So be very cautious. If there's a 10 or 15% sell-off and you're in a stock where there's not much demand, what's going to happen? Your stock's going to roll over, drop 20%. And you're going to be like, I didn't even think it could go that low. And we've all been there. Somebody wrote me today real quick before we get to Q&A. They blew up their account. And I said, how'd you do that, man? He said, Carnival options. I said, you didn't buy the same ones that I bought that said I was risking. They expired today. The ones that bought next week, I've given examples every night of how if I bought AI and gave myself an extra week, I would have made money instead of losing 80%. Okay? I'm so impatient. All right. That's what my downside is. I'm so impatient. This is all growing organically, and I can't understand why I don't have 10,000 followers. Why it's just not blowing up. I give out winning trades. I give out this. I don't charge anything. I mean, I charge less than a meal. I went to Burger King today. It was $11. I saw Carlos. I got him 2 Big Macs. $11.36. That's 3 weeks of my platform. You make one good trade, or you just learn, and that's it. So please, people, share this. Pay it forward, okay? Some people have offered me tips, donations. I'm not doing that. All right? Pay it forward. Share this video with somebody else. Share my Twitter account. Suggest to somebody that you want to, somebody that is into stocks. People said, let me sign up 15 people free. We're not a soup kitchen or a lunch kitchen. I don't have a wait line going, yeah, this person's looking for a scholarship to my platform. That doesn't happen. So I appreciate that. Rather than paying for 15 people for a couple of weeks, find some people that like stocks. Tell them you'll pay for a week. Sign them up. I want everybody to learn. I want all eyes on this. I don't care if you're 18 and you're in high school, or if you're in 20 and you're in college, or you're just out of college, you're looking for your first job. I don't care if you're divorced and you're 70. And if you live paycheck to paycheck, I'm not trying to take your money. I'm trying to make sure the institutions do not take your money. All right, let's be clear. It's us versus the institutions. I'm not Reddit. All right. And I'm not one of these gurus that talks about stocks and and shows you an account that he could easily put in $20,000 every day. If these guys are making so much money, and I won't point out any of them, okay? If you throw 10,000 in Robinhood, it just goes up in your Robinhood account. And he could be making the safest trades. He could be selling call options and making $1,000, because that's all that I see on these people's spreadsheets. They're up. They don't show you the spreadsheet. They don't announce the trade like I do. They don't timestamp it like I do. So again, if everybody was transparent, I probably wouldn't be doing what I'm doing now. I'd be like, look at this guy. He's so transparent. Let's get to some Q&As, all right? Let's start off in the top. Carnival options, got that. Follow me, side questions. Yeah, we're up to side questions. I love that. All right, you bought some calls in the money, went down, averaged down, then you bought the 8 calls. They went down. What am I thinking? Okay, so I'll talk about the stock, SRNE. We've had 3 straight days. I don't even need my phone. Oh, by the way, I got a new cell phone. So sweet, but just sharing. So we don't really need to chart. Look at that, because I look at SRNE, all right? Now, what do I see there? I mean, I see 3 such light days in a row. And before the light days of selling, or the outflow, okay, it was outflow, which is basically people that were scared selling. The market's going down, and they want to get out of SRNE. They want to save 10 cents, 12 cents. I wrote it down. But I thought it was good. The market capitulated. It lost like 20 cents. It lost 10 cents. If it had gone down below $8, I would have been nervous. Because remember, before the boom, it was under $7. It was under $7, went to $7.50. It went to $8 and change, $8.80. The fact that it didn't go down to $7.50 on 2 terrible days, or 3 terrible days, actually, that says a lot for the stock. The stock is still extremely strong, just like Delta Airlines, and I was right about that. There was demand. The same thing I see. Any type of volume will make it spike. I was hoping it was going to happen today, but it didn't. So let's go on to the next question. I like your options. Now, I have option rules about averaging down. All right. If you're on my platform, if you're not, I'm going to share them. I don't average down on options until they're 40% down. And you'll say, what? That's crazy. 40%. Options move quickly. Options are dangerous. I'm not a financial advisor. I'm a smart guy. I try and share my moves with you guys. Okay, EBON. Unfortunately, I'm not sure how the market's going to react. I heard EBON came out with earnings. I heard they sucked. I have a ton of baggage on EBON, and I'm scared to see what's going to happen. However, I know there's institutional support. So say they do push it down. I'm not sure what the new support level will be. It might be $4. It might be $3.95. I do think EBON's a good long-term play, especially, revolving around their exchange and crypto and stuff like that. However, if it gets hit and goes to 380 and then it'll go back, it might get hit and then have to work its way back, but it will. And when it works its way back, if it gets hit 10%, let's say, and then it's going to work its way back for like 21 straight days at 2%, 3%, 5%. That's what I see happen to some of these stocks. Some of these stocks that get beat up and they're not supposed to, they work their way back. And every day it's like 2%, 3%. If you find a stock like that, it's a heaven sent. I was in a stock like that. I used to call it a beast because every day it was 2, 3, 5, 7%. All right. So Charles, I got to see what the market does on Monday. It's not even tomorrow, right? It's on Monday. Thank goodness we have the weekend. They'll process it. All right. It's really going to be the institutions because the institutions are supporting EBON. Now, again, if Bitcoin and other cryptos, skyrocket, there it is. Now, Dodge is so, there's a bunch of cryptos that are strong. I don't follow as many cryptos as I probably should. I still like stocks because I understand them. These cryptos, I've seen the volatility. Now, the volatility is usually on the good side. They usually go up and spike like 50%. My favorite is Uniswap. Again, every time it goes up, it's crazy. If it goes down, I'm like, all right, well, I'm still killing it. And then it goes up. So Dogecoin, yeah. Dogecoin has a good base at 30 cents. I don't know where it is now, maybe 33 or something like that. I saw Bitcoin rising. I'm assuming Dogecoin's following. But I assume it's going to make new levels. The same way Bitcoin's going to make new levels and then plateau and then make a new level and plateau. And again, I called 58,000 last week and we were 48,000. I said 58,000 by Friday. We got darn close. Are we 57? I did say 58 by Friday. We're 57, right? Now we got the weekend. All right. I'm not in Bitcoin plays because some of you are in Mara. Somebody showed me a huge return today, 200%. Congratulations. All it is you're taking my information. So I don't tell you what you have to be in. I give you as much information as possible, and then I ask you to digest it. So if you say, man, this dude's talking about Bitcoin last weekend and saying it's going to go up 20%, the stock should at least go up 20%. And after Monday or Tuesday when they went down, people just started buying them. And I said, please, be cautious because I feel like Wall Street was going to pull the rug out. But I guess that didn't happen with Bitcoin spiking, Tesla spiking, Bitcoin stock spiking. Even the market was down, those stocks were still up pretty substantially. Mara was up 11% one time, 8% when the markets were lagging a little, 7%, but it was still holding its own. All right, so Dogecoin, it's going to keep hitting new highs. There are probably other ones out there. Let's see, NVAX. I don't know that, but I have this new phone, so please give me a second. All right. Let's see, NVAX. Here we go. NVAX. Now, I'm sorry that I'm a little slower, but nothing is planned here. Just in case you're following along, I try and give you guys an honest analysis of stocks. If you want to share some more like Amy did and say, here's the stock, I got in at $15. I think it's going to $30, and here's why. Or you could just tell me, here's my price target, here's my entry point, and I can tell you what I would do given those circumstances. So this part of the program is something like buy is either hold, like I'll hold the stock or I'll sell it. So let me get to this one. Okay, Norvax. It's at $238. I always look at the 1 month chart. The 1 month chart always, because it shows you the inflow versus outflow, and it shows you the volume. So again, the last 3 days, extremely light volume. I like this stock. I would actually be buying this stock. I actually might buy this stock. And what do I mean by that? I mean like the stock was $188. There was strong demand, probably pushed it to 200. There was strong demand that made it peak at 256. All right, there was strong demand pushing it to 256. So the last 3 selling days puts it on discount to 236. So if it's going to spike past 256, it could probably go as high as 285 or 290. So yeah, it's on my watch list now. I might use something like a 3-month out call. So this is just my personal opinion. If I was going to invest in that stock, again, I'm not a financial advisor, but I might go out a little past July because we don't know if there's going to be a sell-off. But I'm going to look for the spike in the next few weeks. By June, if this is going to spike, it's going to spike to 290. I'm just being safe by buying extra time. All right? It doesn't matter. You could buy one contract. Just make sure you buy the dip and you plan ahead. If you don't know what I'm talking about, then you should be on my platform. If you do know what I'm talking about, that means the stock opens up. You're assuming the stock is going to go down 2%, 3%. The market will sell off, and you're going to get your option 50 cents or $50 cheaper. And that's all about saving money. It makes a huge difference in the long run. Okay, CCIV. Now, I know this company again. I love their cars. What I don't like is certain valuations. And what I mean by that is, how do we know the true valuation of the company? So there was good news. Actually, recently, it looks like there was high demand. Oh, that was probably Friday when we spiked, right? If it was Friday, then you can discount that spike a little. There was a lot of volume, a lot of buying. So what could have happened on Friday is, since this week has been pretty dead and Friday was a booming day, right, last week, what could have happened is all these institutions put in their positions, and now we're just holding and waiting for the drawback with all this money on the side. So if the market does go down 10 or 15%, they're going to push those positions hard. So if you're watching certain stocks and they spiked recently, look for the pullback like the one I just mentioned, NVAX. I don't know, the pullback was only probably like 10%, but that's a substantial pullback, and that's a strong demand stock. You know what, this thing. Okay, CCIV, sorry. So again, based on that Friday, it's very even right now. The stock is definitely looking like it's found its base. And any bit of good news with this company. Now, if you follow CCIV, you're looking for any type of catalyst. Yeah. So I guess once the merger confirms, the same thing that you saw before. I mean, they're not pushing this stock. I think they pushed it from $28 to $62 or something like that before they let it tank back to 25. They're not going to do that again. But you could definitely get like a 20% pop if you knew when the merger was. Okay, let's go on to the next limited downside right there. Okay, let's see if I can help you. Do you think about CC 27 May date? Yeah, I just mentioned that earlier in the broadcast, and you probably had your question out early on because you've been here for a while. My point was Carnival Cruise Lines. By the end of June, I could easily see $44, $45. Okay, as long as cruising continues and there's no hiccup or anything like that. I mean, cruising they're going to do soon. I know Ron DeSantis has an issue about passports and vaccinated and whatever. It doesn't matter. The cruise ships bring a lot of money, and cruising will win out, and they will cruise. So my point is, yeah, Carnival Cruise Lines, I would probably go out to like September. I would pick maybe like a $30 call or something like that. You know, that way you're not paying up for in the money right now. And then I'd probably purchase as many as I could buy without caring about the money, meaning don't worry about it till September. If you get a spike from Carnival and it goes up like 20% one day, I would sell my options. The same is true for any stock or options. If you're learning, say you have a long-term position, whatever it is, if your stock spikes for no reason, it's a gift. Sell. It doesn't matter how much you like the stock. Sell it. It doesn't matter how much you like the options. Sell it because there's probably going to be a dip. And you want to be ready for that dip. That's a way to increase your portfolio. You don't have to ride it and hope that it even spikes higher because that's highly unlikely. When it spikes, sell it. Plan ahead. If your options or your stock, whatever it is, say it's like $2 in the morning, you know, the option or the stock, and it goes up to $4, plan ahead. Pre-sell order. You buy an option for $200. As soon as you buy it, put the order in to sell it for $400. That way you don't have to sit in front of your computer. That's what my people are doing, my platform members. You're buying something, and the next minute, as soon as your buy gets confirmed or gets triggered and you get the alarm on your phone, you go and you put the sell order in for 100%, for 50%. It doesn't matter. And someone said to me, dude, you make this so simple. That's the point. Okay? Everybody's trying to trick you with all these things, even if you're on Robinhood, okay? Who cares what platform you're on? Point is, you buy something, stock or options, have your exit strategy. I'm talking mostly about options because you're looking for 100% gain and you don't want to miss out. You don't want something to go up and miss out. You go back and you log on your computer and like, oh, that stock was up 6% and now it's back to even. So all you did is ride the elevator up and down. If you plan ahead, as soon as you buy the option, put in the sell order. I don't care if you bought 100 options, 10 options, 5 options. It doesn't matter. You put in the sell order for 100% gain, 50% gain. It just, if it spikes, you get it. If I told you that when you're entering into whatever position it was, you're going to make 50% return, you would take it right there. You would be like, I don't even want to buy it. Just give me the 50%. That's the point. You buy something, you put in the order right away to sell it. So again, I say that different times. This is a notebook moment, okay? Tell yourself, when I put in an order, I'm going to put in the sell order. Now, I don't do that for stock. If I'm talking about stock and I enter a 25% position, I have a certain price target I'm hoping it hits. But if you're talking about options, options are very dangerous, especially like Tesla, options that are very volatile, that move. I'm sure Spotify is probably like that. That goes up 20 points, 30 points. If anything goes up a big substantial point or a substantial drop, you got to be careful. So the person was bragging to me yesterday, Matt, spot on call, your option's up 68%. I said, what are you doing sending me a DM? Put in an order to sell. And then she said, but I think it's going higher. Yeah, give me the thumbs up. It's going higher. And you know what happened? It was Carnival, and Carnival went down the rest of yesterday. So she went up 68%, could have closed out and bought back on the dip. If she'd bought back on the dip, she would have bought back around 3:50 p.m. when it was at its lowest. And we also had Carnival happen today. They tried to push it from $27 to $28. She would have crushed it. She would have made 68% the first time, and she probably would have made like 80% today. Instead, you know what happened? I think she lost 40%. That's what I'm talking about. Timing is most important. Entry point is most important. Having a strategy is most important. Picking an exit point, planning in advance. And you're like, dude, just slow down. I'm writing all this down. It's all on my platform. All these things are listed out. I have certain rules for stocks, options, different times. And I talk about the psychology of trading. I show you guys one of my lessons. Zoom out. Meaning, if you're following a stock and you're on your phone and it's up and down, and you're just following the ticker like 5 cents, 2 cents, 5 cents, 2. Oh, the market went up. Did my stock go up? Oh, the market went up 200 points. My stock only went up 20 cents. What's going on? Where's the correlation? Bitcoin just went up, but Mara's not going up. If that is you, zoom out. Okay? Nothing correlates instantaneous in the market. People have to figure it out. So you have to zoom out on most everything you do. Is TYME on a recovery? I spoke about that yesterday. Again, so I don't really have to look at that because I look at that one every day. I have a small position in it. I got in at 240. Then I got in at 220 maybe. Then I bought at 180. I took it down to $2, I think, something $2.02, $2.10, something like that. I'm holding. I'm not selling for a loss. The loss right now of 60 cents would be like 30%. I don't lose money on stocks. So if it is, let's say, okay, if you step in shit, step out of shit. I don't think it's recovering anytime soon. It could pop one of these days, but that would just be luck. All right. It does look good. However, I'm ready to hold for 6 months. If you're not, my point is, if you're not ready, let's simplify. If you're not ready to hold it for 6 months to get a good pop, like a 40%, 50%, 60% pop, then sell. Step out of the poop, figure out what to do with your money, and then reinvest it. Then someone said to me, I want to give you a tip today. And I said, that's so silly. Just reinvest it. I would rather you guys reinvest your own money. I don't care what it is, $10, $100, whatever it is. If you can reinvest your money and do the right things, it'll make a difference. Small piles become big piles. What am I saying? Let's go on to the next one, please. Okay. Now, this one I don't know, but I heard you mention the stock today, and you said, I think it's moving, but it has a cap here, Asa. And I looked at it, and I just don't follow the stock, but I will definitely look it up. So I'm holding May 21st, $50 calls and 10 shares, and you heard about a catalyst coming in July, but you have May calls, and you're thinking about a July catalyst. Well, let's see. You know what? I should use my own phone for this, my old phone. SAVA. All right, so let's look at it. Let's look at the 1 month chart because that tells me everything. Again, the 1 month chart, if you're following along, please look at the 1 month chart. I look at all the bars on the bottom. Green is inflow, red is outflow. The size matters in this case because the bigger the candlesticks are, the bigger the volume is. All right. So sometimes you'll see huge volume and everything else is small. That means that day there was just significant volume. So what am I seeing in this one? There was huge selling, even though it was going up. So there was profit taking a few days ago. But if I take that one candlestick of profit taking when the stock went up, that means 6 out of 7 positive days, more inflow. Even today, people were selling. So what does that mean? It was profit taking. Yeah, actually, this stock actually looks good. The 3 month, if it were going to spike, I think you'd probably get somewhere around the $58. So if I were planning ahead and I was Asa here, I would say to myself, if the stock spikes from $46 to $56, the $10 spike, how much will my option go up? So every day I would prepare for the spike. So if his option, let's say, is like $2 now, and I'm preparing for it to go up $10, I would put in a sale order starting the morning for $12 or $1,200 per contract. I might even add a little more in case the spike's a little higher. Now, if it doesn't sell that day, no loss. You didn't stress yourself out. The only thing Asa would have done is prepared in advance. So if it spikes, he doesn't have to worry about people taking profit and selling, because as soon as it spikes, someone's buying his option. His option goes from looking like bronze to looking like gold or a diamond. That's why people pay a lot of money for it. You're like, who the heck would pay that much money for the option? They do. There are algorithms and computers. So although you think you're getting a steal making that money, there are computers that think your option is going to be worth more money. That's why they're paying for it. Look at Tesla today. It just kept going up, 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 up. If I had options, I probably would have sold it 3 times. The point is, if I got in cheap enough, I would have just rode it up. I love Tesla. Oh, another win against Tesla. I am now 6-2 versus Tesla. All right. Let's go on to the next stock. So yeah, I like your stock. I think $56 to $57. If it spikes, you're looking for, a spike. It can spike without a catalyst. That's how strong the demand is. Anybody that doesn't know the stock, I should add that to my watch list again. SAVA, because I might be looking for position. It actually looks really strong. What I don't like is that it's gone up a lot. However, it came down a lot first. So it might just go back to that point. But we don't need it to go back to $67. It would go back to $56, which would be about 24% for the stock. With the options, you would make a couple 100% probably. All right, let's look at OXY. By the way, I love talking about stocks that I don't necessarily know, because the chart tells you so much. So you don't have to know about stocks. Now, let's say you read the chart and you like it. Then you do additional homework and you Google it. You look online. You look at the previous earnings. You look at when the next earnings period is. You look at all this stuff. How much cash do they have on the books? These are all questions I ask myself. So OXY, Occidental. We're going to look at the 1 month. Here we go. Heavy selling, right. Looks to have bottomed. I like to see if it really did bottom, if it can go down more. Yeah, it looks like a decent chart. It looks like it actually is going to go up higher. If it does go up higher, I would suggest that you probably get another 25% out of the stock. So you guys asked me about price targets. This is what I'm doing. I'm looking at the previous chart. So I look at the 3 month, the year, and then decide that if I'm right about the pattern, because it's always about the pattern. That's how you want to simplify it. Take the pattern, print it out, all right? Then you take a pencil, a crayon, a marker, I don't care, and you draw it out, how you see it ending up, okay? So a pattern like this, all right, looks a little mountainy. Everything looks like mountain size, okay? It's either a gully or a hill or a mountain or a peak or a valley, okay? Just simplify it. Don't get technical. I see some of these guys with so many lines across the chart. Oh, yeah, it's an upper cone coming down the right way. It's a bullish trend, the 50-day. I'm simplifying it for you. So if you get confused, you're like, I don't have time. I don't know what the 50-day average is. I don't know what moving bands are. I don't know what this is. I don't know what that is. I don't care. I want to simplify it. My daughter, I ask her to look at charts sometimes. How do you think this is going to go? Daddy, I see that one. I've told you guys this before. It looks like a U. Is that a U? And I'm like, no, it's the chart. That's how you think it's going to look? Yeah, like the letter U. Okay. And then lo and behold, she's right. It's a U with a little cup. You guys like the cup and the handle? That's what it is. So my daughter can pick it out. Again, you don't have to overthink it. A lot of you overthink it. And that's what the institutions want you to do. That's what everybody's telling you. Did you do your research? Do your due diligence? Do this? It's really about supply and demand. If you want to go to everything is. All right. Saying you're buying eggs and they're out of eggs in the supermarket. So somebody asked me to explain short selling. Okay. You real quick example of short selling. Say you go to the supermarket and they have a dozen eggs, right? And all of a sudden, everybody drops the eggs and everybody comes in wanting eggs. There's only 1 dozen eggs, and there are 100 people that need to buy 1 egg to cover their short position. So they go, I like that egg. No, I like that egg. I like that egg. Someone says, I'll pay $5. I'll pay $10. I'll pay $20. So yeah, the price of an egg, it's like scalping a ticket to an event. It'll just keep getting higher. All right. So let me go on to the next stock, please. I got to open my phone. What are my thoughts on OCGN? I would say it was a wrong call too, probably to sell. I got nervous when they made an offering. Again, we've spoken about offerings so many times. You'll see this on many of my segments. I said once, 99% of offerings are bad. But I also said that OCGN did it the right way because they had 438 million shares traded that day, and they offered 10 million shares. They offered such a small fraction, and the stock was already pushing higher. That's what you need to do. When Viacom did an offering, nobody was buying their stock. The only people that were buying that stock was that Argos fund that ended up going bankrupt. They was the only people pushing it up for months. Somebody used to tell me Discovery stock's going up every day. I don't know why, even on bad days. Well, now you know why. It was one person pushing it up. All right, so OCGN, they did it the right way. I was sorry. I almost re-entered at $11, but I didn't want to re-enter. This would be the worst thing possible. You enter at $11 again after you say it's going down after an offering, and it goes back to $10, and you're down 10%, or you're down like 50% in options. So I just chose to stay on the side. I'm going to look at the chart. I already had the O in there. OCGN. All right. Woo. Wow. I mean, it looks strong. I'm going to tell you, it's really strong. It is really strong. I really like it. Yeah. So, I mean, if you want to get back involved, again, remember, so if we get back involved, we buy dips. Now, this stock tends to dip. I'm going to look at the 5-day right here. So there was a dip today. There was a dip yesterday. There's a dip. There's been a dip 4 out of the 5 days of this week. So if you're looking at OCGN and you're looking for a dip, it was up 71 cents today. So it was as low as like 11.97, 11.39 today. So it was actually down at some point up to 13 and change. So if you're going to get an OCGN, I would look for a retracement back around $12. If you pay anything more than $12, you're putting too much risk out there. So it's risk versus reward. So even though, yeah, Matt, you're talking about the stock could go higher, why would you care what you get in? Because it's always about entry point. That's what I preach. That's what I teach. Entry point. If you nail the right entry point, even if you're wrong about the stock, like those Delta Airline options yesterday, you got in so well. I got in so well that even though Delta basically took a poop on itself yesterday, I was still green. And then this morning when it spiked, like I said it would, it was great because then I made profit and I got out. Let's go on to the next stock. Facial recognition. All right, ChargePoint bought at 32, hold or sell. All right, let's look that one up. ChargePoint is CHPT. All right. Wow. Now this chart looks pretty crazy. It's a hold right now. It's at 25. Unfortunately, I see it going up, but if it goes up, I don't think it's going to $32. I would be shocked if it goes to $32. If I were in ChargePoint and I got 10% more out of it, that's what I'd be looking for. So if you're in ChargePoint right now, or you're looking for a quick play, ChargePoint, Blink, Plug, Neo, XL, First Solar got beat up, Canadian Solar got beat up. All these green energy stocks or green energy related or EV related stocks are beat up. But remember, go best in class. So if you like ChargePoint, you probably like Blink, Plug. I don't like Plug because it was $77 got hit. People, millennials, everybody seems to like Blink. I tell you, I don't really like the company, but I've traded it 7 times for profit. 7 for 7. That's what I'm talking about. Leave emotion out of it no matter what you trade. You have to trade a stock. If you know a stock like Family, leave it. You don't really care if the stock goes up or down. You care about making money. And if you care about this stock and you don't care about making money, then you probably should be following me because I'm trying to make you money. And I'm speaking to you. Exactly to you. You're like, hey, he's talking to me? I want to make all of you better traders, but that happens through proof. It's like the proof is in the pudding. I show my spreadsheet as much as I do that it's so green because that's what's going to prove to you. I retweet people's comments like, thank God, Matt's rules, I need 40%. I did this. I was scared. I had more confidence. He gives me so much confidence. That's what I'm here to do. I'm here to teach you. I'm like the professor that tells you, here's what you did wrong. Here's what you could fix next time. I'm not telling you what to do. I'm not that asshole who tells you this is what you need to do. And we'll probably wipe that on the replay. I'm sorry for that. There are so many people that are like, this is what you need to do. You need to buy this stock. You need to pay the ask. That's not it. That's not it at all. You need to get the best price. When institutions are buying a stock, do you think they're going, let's push this up, let's push this? No, it's all about return for them. So institutions, you're like, why wouldn't they push it up? Why doesn't it go up? If they're buying so much, Carnival yesterday, there was like so much money, $150 million from institutions yesterday into Carnival, yet it went down. So you guys say to me, well, it doesn't make sense. Why would they go into it if it was going? I don't get it. How did it go down? $150 million. That's what the institutions put into it. I do the math real quick. The point was, when it's dipping, they're buying a position. As it's dipping more, they're buying another 20,000 shares, 50,000 shares, 60,000 shares. As you guys are selling, not you personally, but as people that are selling Carnival, oh, it's going down. I'm getting out of here. I'm throwing them. I hear, take my shares, take my shares. Cheap, cheap, cheap. The institutions are like, yeah, the institutions are fat now. Oh, I've got so much Carnival. What happened to Carnival today? They held it on to 28, so they wouldn't have to pay the options manipulation. We saw that. There were certain walls. Two people reached out to me. They said, what was that wall at 104,000 shares at $28? It was somebody telling you the stock is not going over $28. Now, the good thing is, if the market rebounded, an institution would have bought off that wall instantaneously. It would have been like, 2.8 million, I don't care. So that's why I still held on to my options, because I knew if the market had changed, we would have got a big boost of like 60 cents. I would have made it. You guys would be like, this dude's a genius. He paid 4 cents. He got 44 cents per those. So there are certain times that I will take a risk from that. All right, FAMI, I mentioned this one yesterday. They did an offering. The stock was over $1 recently. They did an offering. They offered 100 million shares at 30 cents. Talk about a company needing money. So who's going to play FMI? Okay, FAMI. People like you, people that aren't that experienced with traders. And that's not an insult to you. But I'm telling you, imagine you times 10,000 or 100,000. There are 100,000 of you. Somebody reached out to me and told me you bought 500 shares, 5,000 shares, something like that. I said, be careful. I said it was going down. I'd be careful. They did an offering. The point is, if you and new traders, and there are hundreds of thousands of you, and you each buy 500 shares, guess what's going to happen to the stock? It's supply and demand. It's going to go up. So sorry, I was going to look at FAMI. I think it's, let's see what it did today. I kind of want to be right, but I kind of want to be wrong, because I know some of you jumped in there because you think it's going to go up, and you might be right. I mean, there was heavy buying today. So this heavy buying today, okay, so the market volume was so light today. Here's what I'm going to tell you about that stock. Yes, you can make money on FAMI. If you're there, you can make money. If you're not there, look for a dip of like 10%. Look for like under 40 cents to get in, and you could probably ride it. If you see momentum and it's spiking, you're looking at volume, because I teach you how to look at volume. Say you have this on your watch list and you see a big buy and another big buy, and it looks like it's about to explode. You can get in there first. It's okay. But understand, you're not trading against the institutions. That's not institutional buying. Today was so light. Yesterday was so light. Yet that stock has major inflow, major buying. So it's all of you. It's 100,000. It's a million of you. Okay. 500 shares at 40 cents is $200. So a million of you are spending $200. That's $200 million. What do you think is going to happen? The people that still want to get out of it are selling it. Everybody else is buying it and pushing it up. So I would just be very wary. You can make trades. They're called momentum plays or swing trades. It means you don't want to be in them too long. All right. Remember all the ETF, the exchange traded funds I mentioned earlier, SQQQ, TQQQ, SDOW, UDOW, UVXY. If you missed that part of the lesson, it's in the beginning. I talked about the fragility of the market right now and the volatility and how it's a little crazy. These are ways to safeguard yourself. So if you know the market direction, these are investment opportunities that you have stock or options or exchange traded funds. My point about that is you never sit in an ETF for more than 2 or 3 days. Why? Because they charge you expenses, not you personally, but it takes away from the pricing of the ETF. They charge expenses. Oh, it's tough to run these ETFs. We have to do this. We need to take money. They're just stealing again. The expenses are ridiculous. All right, next. Oh, I like that you paid that. Okay, KPD, you're holding long-term 32.25. I love when you guys give me entry points. I'm so bad at using the phone. KPD. KPD, yeah, KDP. Okay, sorry, see, I might be dyslexic. I used to do that. Oh, Dr. Pepper. Okay, so I know what Dr. Pepper is. I actually don't like Dr. Pepper drinking. I'm sorry for taking the time. Let me look. All right. No, I would. I mean, it's probably based on the market. It's going higher. I would probably take profit. I'm not going to lie there. If it does go higher, I think you're limited there. I think if it goes higher, you're limited to maybe like 6 or 8%, which if 6 or 8% is good for you. And it's definitely a safer play. The downside is limited. The chart looks really good. There is support. Just I'm not seeing that it's going to jump. We all like jumping, don't we? We all like our stocks to just spike. Hey, did you see my stock? 25%, 18%. I call that. I got in at 3%. It's 40%. I know what everybody likes. I like that too. Man, if I get into stock and it spikes, I'm like, look at this. The market's struggling. My stock is spiking. People want to buy my stock. I got in first. All right. So that stock, I would say the upside would be like 10%, 8%, but it has limited downside. I just don't see it moving. You know, it's probably like Coke and Pepsi. I don't look at those stocks either, but I could find it hard that Coke wouldn't move, or some cereals like maybe General Mills or something like that. I would find it maybe hard. All right, let's go to the next one, please. Next stock is, let me just clear this up. I always lose my voice around this one. FRSX. FRSX. Now, thank you, Tony, for being here. I know you said you got scared with a couple of your option plays. Please understand, this is for you, Tony, and for anybody else. Okay, so anybody that thinks you're alone or Tony's alone or I did the stupidest thing today or some guy told me he blew up his account because he chose the wrong option state. Anybody that thinks you're alone, you're not alone. There are people here with you. There are people doing the same thing. One thing about 349 that I wasn't crazy about in the beginning is that we're building a community. So I told you my goal, get a couple 100,000 people, make them trade better, make them trade smarter. But it's the support issue too. I never thought I'd get emotional or empathetic, but everything you guys do matters to me. The reason I give out less alerts on my platform is because the market's crazy. I don't want you to lose money. When I give out an alert or something like that and it goes down, I felt terrible, not about my Carnival position yesterday, that some of you I know jumped on the Carnival options expiring tomorrow. If you chose a week out and I knew that everybody had to choose a week out, I wouldn't even mind. I'd be like, I know it's going to be better next week. But I know people like to do what Matt does. And that's why I tell you, that's why there are rules in place. I'm doing this, but if you're buying the option, go out a week. I'm doing this. Anyway, let's go on to the next stock. Okay, sorry, Tony. I didn't mean to use an example. And I just want everybody to know you're in the same boat. So if you're feeling down about yourself or this or that, just read somebody else's comments. They've blown up accounts. They make it back slowly. Okay, so here we go. FRSX. So anybody that wants to follow along, FRSX, you put the ticker there. I mentioned this one yesterday. It looks like there's inflow. However, when there's inflow and the stock is going down, it makes me weary. So no, I'd be selling that one. I would find a better place for my money. Let me just look at the 1 month. Again, there's more inflow. Volume actually looks pretty good, yet it's selling, it's going down. So that to me doesn't make sense. How could there be more inflow? Volume is good. Those are two things I'm looking for, and the stock is going down. So if two things don't make sense, it's like 2 + 2 = 5. All right, just simplify it. If 2 + 2 = 5, it doesn't make sense. It's a bad investment. It's wrong. All right, and I don't feel that strong about something. But when I see something and it doesn't make sense, I get the heck out. All right, let's go on to the next stock. I saw someone mention Twitter. That's what I think it was. And somebody I know bought options on Twitter because we like to buy stuff when it falls off a cliff. So yeah, Twitter fell off a cliff. Volume was strong, but it was selling. So I'm going to assume whatever Twitter opened at today, I haven't looked at the chart yet. I'm looking at the 1 month chart, but I'm assuming whatever Twitter, this is my prediction because make predictions about everything. It makes you smarter. It makes you learn better, learn faster. You see if your predictions are right. And as your predictions get better and more accurate, then you might not need me. You might say, I know what the market's going to do. It's a fake out or this is going to happen. So yeah, Twitter. Okay. Before I look, I'm going to say it started out, whatever it started out pretty bad, and it probably got worse. So let's go to the 5-day. I'm not there yet. Oh, maybe it got better. I'm looking at the 5-day. I mean, it looked terrible, though. It looks like it fell and then fell again. All right, the 1 day. So we got active trading. So it's up a little after hours. No, it looks terrible. It fell at the end of the day, too, right? I fell off the cliff. Yeah, and volume was so high. I'd be worried. If the market corrects itself next week and we have decent days and tech does well, Twitter will rebound. However, say tech sells off on Monday. So here's what you want to look for over the weekend. If you want to really stress yourself out, look at the 10-year note. The 10-year note goes up, tech struggles. 10-year note goes up, tech struggles. 10-year note is inflation. Okay? 10-year note, inflation is going up, tech struggles. This is how it is. That's the correlation. So tech's been struggling also. It's been kind of reaching new highs. But when tech reaches new highs, understand it's the FANG. You know, it's Facebook, Apple, right? Google or Alphabet, Netflix, right? That's what it is. So tech's going up. You're like, my tech stock is struggling. That's what it is. All right, let's go on to the next stock, please. So Twitter, I'd be very cautious. I wouldn't be buying unless somebody told me it was the bottom. If you told me, again, that's kind of stupid, right? I even say stupid things. If you told me it was the bottom, I'd be buying. Of course, if I told you this is going to win, you'd be buying it too. All right, the point is about Twitter. It can still go down lower. So I'd be cautious. If you enter into an options position, someone told me they bought 5 options today and they paid like this and they bought it out a few months. Yeah, that's fine. Buy it out a few months. Buy July, August, whatever it is. Go out a few months. Buy right at the money, $57, $58, something like that. Buy 1 contract, buy 2. If it goes down 40%, average down. Buy 2 more contracts. Or you could probably buy 3 more. If your options contract goes down 40%, you're spending the same amount of money. So say you spent $500 buying the first 2 contracts, right? $250 each, and then it goes down 40%. So it goes to $150. You spend $500. Guess what? You get 3 contracts, and you actually spend less than $500. So when you average down, you actually get to increase the number of contracts you buy. So you buy 6 at first, it goes down 40% or 50%. That allows you to buy 9 contracts. So rather than doubling down like stock, you actually have more contracts. And when it goes, you actually just kill it. So there's a trade secret right there. I'm teaching you how to properly average down. So I have rules about that for stock. I have rules about that for options, and it's all mathematics. So when we talk about planning ahead for something, and I tell you it's 10% rule, I gotta go a little longer. 10% rule for stocks, 40% for options. You understand, you don't have to sit in front of your computers. If I tell you 10% for stocks and stock is $10 or $20, let's say $20 stock, 10% less is $18. Your next buy is $18. You bought it $20. Your next position is $18. You go do whatever you need to do during the day. You don't have to watch the screen. Same with options. You bought an option for $200 or $2 a contract, right? 40% of that is 80 cents. So your next buy would be $1.20. So you bought the first one for $2 or $200. You put in an order the next day to sell that contract at $4 because you want 100% return. At the same time, you're putting in a second order to buy another 2 contracts at $1.20. So if it goes up, you have a plan. You sell at $4, you make 100%. If it goes down, you have a plan. Always have 2 plans. I'm not confusing you. I know I'm not. I know you're smart enough. If you're watching me, that means you care enough. So have 2 plans. It's like if this person does this, I'm going to do this. If you have 2 scenarios, if it rains, I'm going to use an umbrella. I'm not going to the beach. If it's sunny, I'm going to the beach. Have 2 plans. So again, when you own an option, 1 position, 2 positions, 10 contracts, whatever it is, if it's $2 at the start of the day, say I want to make 50%, I'm going to sell them if they go to 3. And then you also say to yourself, if the option goes down 40%, I'm going to buy more. So if it goes down, I'm going to buy 5 contracts at $1.20. You have 2 plans. Both aren't going to happen. It's not going to go down and up. Or if it goes up and down, guess what? If it spikes up, you just made 100%. And then if it goes down, you just save 40%. If it does both, you're just like a double winner. The point is plan ahead. If that's the best thing I can say to you. All right, I'm going to do the last stock here. Tiger, I love Tiger. May 21 calls. I might go out further now. As the stock goes up, I think it's going to hit 27 by May 21st. I think it's going to hit 44 by the end of summer. I wouldn't be surprised if it's 66 in December. That's how I like that stock. Same with Futu, F-U-T-U. I wouldn't be surprised if it's 220, 240 in December. That's what I like. So give me one more stock, and then I'm going to let everybody go out on a Friday night or do whatever you guys are going to do. Hopefully you guys have more of a life than me. I'm probably going to go to sleep. I wake up way too early. I wake up too early to follow the market to tell you guys what I'm seeing. So XL, okay, so we know XL's been beaten up. I mean, volume is so light. Every time there's more volume for XL, it spikes. So you need a catalyst. All right, Jim Cramer and the shorts, everybody's gone, okay? Everybody, the shorts left on April 20th, April 19th, when the market turned around. All the shorts, a lot of positions left. Now, they probably took new short positions in other stocks, but they're not in XL right now. So XL is basically fighting the market trend. As long as green energy gets beat up, Canadian Solar, First Solar, Blink, Plug, Neo, these are all green energy, Candy, XL, probably even Solo. If I mentioned your stock in there, they're all getting beat up. All right, let's go. Last question, and then I'll say goodnight to everybody, and everybody will have a good weekend. I might speak about Bitcoin over the weekend. I might send like a stream on the app. I might do a Twitter feed. If you're around, you'll join in. If you're not following me on Twitter, please do. That's free as well. Again, I'm just sharing you guys what I see. So let me get this stock in here. It is BTX. Sounds like a rapper. I used to like, oh, man, I wish I got into this. I saw this the other day. I can't put a true valuation. So BTX is the most highly traded stock today, or no, it was 50-something million, but it moved the most. That's what I want to say. It went up 45% during the market. It went up after hours. I know it killed it because I was watching it thinking, wow, is this really going to run that hard? It shouldn't run that hard. So I would be selling here. I don't know what made it spike, but it's spiking for a couple of days, and the volume was extremely strong. But if you're in that stock, so any person asking about BTX, if you're watching the stock or following it, like, hey, it's the most active, you don't want to get in stocks that are most active unless you know what the catalyst is and unless you know where it's going. So, but if you're in the stocks, if you're in BTX and you wrote it up here, congratulations. I'd be selling on Monday. I probably would have sold after hours at $76 or $80. Oh my God. You bought it at $6 at the beginning of the week? I don't even know what they did, but I would sell. Congratulations. Seriously. I don't know what they do, but anytime you spend $6 and you can get $76, I don't know where it is after hours, maybe $68, something like that, get out. You just made 1,000% on a stock. Imagine if you played options, you'd make 10,000, you multiply it. You made 1,000%, right? 1,000, not 100, 1,000. That's great. Congratulations. Listen, you guys are the best. I really appreciate it. Quick thing, understand this. Please share this video, okay? I will tweet out the link. The reason I'm asking you to share the video is everything I do is organic, so everything's through word of mouth. So if you say something good or somebody hears somebody talking about stock, please just refer them. Let them follow. Let them be their own judge. Thank you so much, everybody. I appreciate it. Have a good night.